Hey everyone, I'm Charting Man Dan of the Chart Guys. I've been trading cannabis stocks for the last 13 plus years. In this video, we're going to check in on the consolidation we knew to be keeping an eye out for and whether or not it's still healthy, bigger picture. We're going to check in on a couple of requested lower cap names like HITI, and also going to be checking in on the psychedelic sector because that sector charts are telling me that volatility is coming, and I'll show you what I mean. Thanks everybody for the likes and the shares. Our analytics have been dropping off the last couple of weeks as I've been talking about consolidation and people only want to talk about going up. But for those of you that do want to hear both sides of the story, appreciate it. And we're going to check in on a couple of things. So how did we know consolidation was coming? Well, number one, we double topped. Then we lost a short-term support of 978. And once that level broke, that told us that the probability of weekly consolidation was going to increase. In a recent video, I also talked about how when we do pull back, we open at the high, we close near the low. And that was obviously taking shape back here as well. We also had the psychological aspect where if people buy in anticipating we're going to get word from the DEA that week, and then we go to the end of the week and it hasn't happened yet, that's the market incorrectly pricing in information, and it has to readjust for that. And the people that bought in, hoping that the news would be out that next couple of days, sell, and that adds downward pressure as well. So all of that said, we know that this weekly consolidation is healthy, and it has to happen. And if we compare it to other things, look at Bitcoin. Bitcoin went straight up. It then pulled back 25% on the weekly time frame. It held weekly EMA 12, and it led to continuation. The crypto mining stocks, MARA, ran up huge, couple 100%, pulled back massively. We dropped almost 50%, over 50% drop, and now here we are back testing the high. So it's not game over. You've got to pull back and consolidate, and the harder you run up, the more you're going to drop. Semiconductor today, SMCI, dropped 25% from the high. Look at the massive day. Why did that happen? Because we went straight up and we did not establish supports on the way up. It's normal price action. Now we need to establish supports, and we need to hold this weekly EMA 12. That was our target once the weekly consolidation started. It was a stair-step pattern. Google Chart Guys stair-step to learn more about what that means. Higher low every single week, 7 weeks in a row. The close last week told us if weekly consolidation is going to happen, this is the highest probability for it. Every other candle had lower wicks and closes near the high. Didn't happen last week. The candle showed us something is shifting. Just like back here. Weakest candle close, and then we consolidate for a couple of months. So now what? Well, bulls were waiting for this consolidation to buy, and that's what I was saying. This is healthy. I'm going to be looking to buy a weekly high or low. So make sure you're following us on Twitter at Chart Guys. I was away and on vacation in Miami, but was posting a bit about some game plan, loosely posting. So we had, on the 13th, hopefully the MSOS videos recently are helping this price action from being a shocker. I start looking for potential entries and bounces tomorrow, February 13th, though I'll be reactive, gotta see what the information gives us. So on the 13th, I start looking for the bounce. And so I start to build some positions. I enter a little bit of MSOS and TCNNF. And then on Wednesday, I enter a little bit more of MSOS and TCNNF. Then we get the bounce on Thursday. And some of this has to do with rebalancing going on in an ETF, MJUS. They were very aggressively selling. You had, I think it was on Wednesday, Truliev's total shares traded in both Canada and US combined was 2 million. 1 million of that was them selling. Very aggressive, indiscriminate selling. But my style of trading means I trim. So I make a couple scale-in entries, and then as soon as we're above my break even and we start to get a bounce going, I exit some because a daily lower high is the most likely scenario, and I want to get my break even down close to that low. So just as an example, let's say I make an entry on MSOS. I enter a third at 8.95. I enter a third at 8.45, let's just say. Now my break even is, what did I say? 95 and 45. This is a rough example. So then my break even is 8.60. Okay, the price then bounces up to 926. And you can see my example. I'm not giving, nailing tops and bottoms because that's unrealistic. So if my average is 860, if I sell half at $9, what's my break even? 820. I can stick my stop under the low, risk-free, unless there were bad news, big gap down. And then I say that's either the weekly high or low and I nailed it, or I'm wrong and I stop out and don't lose anything, and then take a step back and reassess the situation and potentially make entries lower. So with my style of trading, I trim those positions from the last couple days, scaling in, put a stop under the low for very low risk, if any risk. It's either the weekly high, blah, 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 what I just said. So that's my style of trading in a nutshell. I do it on day trades. I do it on swing trades. And so now what we need to see is a confirmed 4-hour uptrend. Low, high of the bounce. This is trying to be a higher low at 865. We looked pretty ugly this afternoon, and we had a late day save from the bulls. If we can break 926 Tuesday, Monday is a holiday, that's going to make the bear flag less likely. Right now, this is a bear flag because the bounce retracement size, Google chart guys Fibonacci if you want to learn about this, bounce retracement size is still favoring a bear flag unless we get up to 946 plus, which is a 50% plus bounce retracement. So, prove it, bulls. What shifted in the afternoon? Well, this big candle, where did that come from? So in the afternoon, we had options activity picking up. And the options activity was $9 calls. Let's see if I've got this saved. $9 calls for next Friday, so very short-term options. Open interest increased like 900%. So before this action in the afternoon, there were 1,300 calls open, and you can see, it's nothing unusual. Now, today, 10,000 volume or 9,000 volume came in, whatever it was, 9 to 10,000. So someone placed a bet, whether it's a hedge, whether it's a bet, whatever, someone placed large orders. And then at the end of the day, we get whether it was shorts covering, not wanting to be short over the long weekend for the potential of a headline. Right now, there's $30,000 bid at 9:10 after hours. So it all boils down to we need a headline. I don't care if it's safe. I don't care if it's the DEA. If we're going to set a healthy weekly high or low and head back to the up, we either have to see the broader stock market continuing to just surge in euphoria mode, which could definitely be enough to keep this strong without a headline, or we need a headline. But this sector so desperately needs a headline, not a rumor, not a maybe, not a soon, concrete headline. We'll see if we get it. So, simple statement, if weekly EMA 12 is support, bulls are just fine. This retracement size is fine. We obviously know the major resistance of 1064 is something to be keeping an eye on, but we can potentially tighten up for a bit. But we want to see one more leg up. TCNNF, that's a weak bounce. That's a bear flag. Simple statement, if we do not break 905 with follow through, that's a bear flag. Look at our retracement size. And again, the market makers told us that the top was in. Went on the Dales report and talked about how, why did we gap up? It was extremely unusual to gap up. I think I talked about it in the last video. Don't need to repeat myself. Anyways, this is a weak bounce attempt. And so it's a battle between 8 and 9 right now. 8 psychological, 9 psychological. And so again, I sell a little bit into this initial move up. Hardly any green. My break even was, I forget exactly what, but upper $8. And I sell a tiny bit into the move to 9 because, again, it's just protecting. I'm protecting in case it's a weak bounce. So I don't have conviction that a weekly high or low is being set on Trulieve at this point. But one thing that's very clear is we had rotation into Trulieve on the Florida headline, and that led to weakness, relative weakness in Green Thumb. As far as I'm concerned, attention shifted from Green Thumb as the lead bull to Trulieve as the lead bull, and then we topped out and the attention has shifted back. And the rebalancing was part to do with that, as MJUS was buying a lot of Green Thumb. But if you look at TCNNF divided by GTBIF, it shows us exactly what happened. Trulieve gained relative strength against Green Thumb for weeks, And now it's given it a good bit of it back for the last week and a half. It's rotation. This is healthy. This is what you want to see in a bull market. We see it in crypto. We see it, in the semiconductors. NVDA leads the way up. Then ARM gets a move and AMD gets a move. And so it's money rotating around within the sector. That's a good thing. But TCNNF has some recovering to do because that fund was selling it hard and we haven't recovered yet. We got to get over 905. If we're going to see a healthy, strong bounce, we want that 50% retracement, which means getting back to $10. And that's 20%, a little bit less. That's 17% to the upside from here. So Green Thumb looks great. We had the bounce right off weekly EMA 12. At this moment, it's a potential weekly bull flag. It looks very similar to right here. Move up, back test and hold weekly EMA 12, continuation. Just look at how many times we've held it. Bunch of back tests, and now another one. If we can break 1430, that's a great sign for the sector as a whole. Even if Green Thumb breaks and nothing else is breaking yet, and this is what I talk about where, if True Leaf's your favorite and you're looking at Green Thumb and saying, Green Thumb sucks because blah, 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 whatever, don't be a jerk. It helps. If Green Thumb breaks to a higher high, it will help your True Leaf position more than if it fails. Root for the sector as a whole. Don't be a nerd. So it's all about 1430. If we were to fail, I would look for a higher low compared to 1220 and a tightening daily range. But nice bounce. Volume's missing. There's no bull volume there, but actually that's a very surprising. The size of that candle is extremely surprising for how little volume that is. Curious if it was on the Canadian side. No. Unusual. But bulls will take it. So all about 1430 next week. Cureleaf is still a possible cup and handle, but the simple statement is 455 must hold. That must be the weekly high or low. How is this possible that it's still a cup and handle? Well, look at your retracement size. It's right off 382, which means a bull flag is still in play. In hindsight, should have been buying Cureleaf instead of True Leaf, at least in the short term. But something I'll be watching for is if we set a daily low or high, if we get 50% plus bounce retracement, we already did, and we set a daily low or high at some point next week, I'll then be watching for the possibility. So let's say we top out, one more little leg up, top out 540, pull back to $5. Maybe I make an entry, put a stop under that low, and say that's either the weekly bull flag shaping up or I'm wrong and stop out. But it is still possible. And again, OGI, CMPS, these two sectors have had these cup and handle type setups confirm multiple times already. And now Cureleaf is trying to join in on that fun. Cresco still very weak. I'm not even going to look at it, honestly, unless something changes with CRLBF divided by MSOS. But here we are testing the weakest it's been ever compared to the ETF in its history. So until something changes here, it is a lead bear. And these relative strength bounce attempts just keep setting lower highs. So it doesn't even deserve my attention on the chart at this point. HITI. So again, I have criteria of things that I will trade, and this name does not have enough volume for me. It's not even close. The average daily volume is $600,000 traded, very roughly speaking. I need millions at a bare minimum. But back test of weekly EMA 12 held. It's a potential weekly bull flag. We're looking at 2 psychological resistance and then 230. So the lows that we have seen at this point for the sector, the lows of this consolidation, bulls really want to hold those levels. If they do, no red flags. If we lose them, red flags in terms of just less than ideal. So key support is 168 from here. Bit of a double bottom. You can see the base established. 169, 168, 168. Bulls defend that level. 168 back here. 167. There is a line here. Let's draw it. That is the support zone, very clearly. Hold, 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 hold. And now heading back up towards resistance. So overall, looking pretty good, especially compared to AYRWF. This pullback is a 50% plus drop. Sugarcoat it however you want. If you're a bull in this name, it's a big red flag to pull back that much. Relative strength into the warrants, significant relative weakness ever since then. This daily bear flag confirmed, and a big amount of follow through. So where do we stand? Go to the 2-week time frame. Nah, let's stick with the weekly. Must hold 157. But the problem is, yes, it's very thinly traded, but you now need a 100% move just to get back to where we came from 2.5 weeks ago. We could bounce 50% and just set a weekly lower high. That's why it's a red flag. You've created a lot of space and a lot of bag holders. Let's tell it like it is. Anybody that has bought this name in the last month plus is red right now. And so there are a lot of people saying, please just get back to 280 where I bought in and I'll sell it at break even. I really don't like being down 40%, whatever it is. And so there's just a new wave of overhead supply right now. So 157 support on the next bounce. It's a daily stair-step drop, lower high every day for 8 days. We're just going to scout a daily lower high to be the result of the next bounce. If things are going to shift in any meaningful way, we need a big bounce, we need a higher low, we need a reconfirmed daily uptrend. But you compare this name to some of the other low cap names, and again, it's just a much bigger pullback as there was a lot of bailing going on after those warrants were locked in. Onto the Canadian side, so OGI is still looking good. We had a big pullback. I was very close to stopping out just because I stuck a break-even stop at 176, which was my entry. And we had a bearish earnings reaction, which was magnified by the pullback in the sector, but very pleased with the recovery here. And where did we bounce? Weekly EMA 12 just above it, still holding. So even if we fail 232, we've got a lot of space now where it's possible we still form a higher low compared to 178. So impressive bounce and trying to get back to that recent high. And again, easily the strongest Canadian name. We look at TLRY, starting to get my attention. It is a falling wedge, a potential falling wedge to be keeping an eye on. And a falling wedge is just a bear exhaustion pattern. And it's identified by, you could say it broke bull today. It's identified by bear breaks lacking follow through. So the low is 184. We break it, straight into a big green day the next day. We then break that low, straight into a big green day the next day. We then break that low, straight into 3 green days in a row. Every bear break goes straight into a solid bounce, which says, watch for a potential falling wedge for bear exhaustion. What I need to see is a break of 195, 197, 201. You got to turn $2 into support. Bigger picture, I'm just viewing this as a big move up, a big pullback. On a bounce, we'll scout a lower high. Again, without a headline. Headlines change things drastically, obviously. But look at the weekly stair step. Lower high every week. For the last 5 weeks, the bulls are going to try and break that pattern first thing this coming week. So momentum is shifting a little bit. I've been dogging on CGC and TLRY because they have been all bears. But TLRY the last 3 days is shifting enough to potentially pay attention to. CGC had a nice bounce, but let's not lose sight that it just hit all-time lows. It's the weakest of the week. Anything hitting all-time lows is all bear. Yes, you can look at this and say, but we just bounced 15%. Yes, we did. There are bounces along the way in downtrends, but we're just looking for a daily lower high. Wherever we top out, we've got to confirm a daily uptrend for any kind of shift. Then we zoom out, we scout a weekly lower high. Then we zoom out, we scout a monthly lower high. There's a ton of work that has to be done. So keep an eye on TLRY, keep an eye on OGI, still in my position, but CGC, give me a 50% plus bounce retracement, give me a confirmed daily uptrend, give me increasing bull volume, give me previous resistance levels turning into support, then that will show us things are shifting. But still a long way to go. So psychedelic names have my attention top watch next week. Shortened week with the holiday Monday. So what we're seeing here is really tight range. I can look at this chart and say CMPS is the tightest it's been in 2 months, 2.5 months. I said this exact same thing for Bitcoin. I said Bitcoin is the tightest it's been in months. Volume and volatility are coming. And it came in a big way. And so I favor the bulls in the psychedelic space for a number of reasons. Number one, the prevailing trend. Number two, the consolidation has been healthy. Number three, we got that headline where the FDA accepted the application for MDMA to be used to treat PTSD, I believe. And we're going to get a decision on that in August. So that's now, or potentially August. That's a long ways away. But it's a positive. So what we're looking at here is, can the previous resistance of 1018 and 1012 act as support? So look at all these rejections. Reject, 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 reject. Now hold, 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 hold. So an aggressive bull is going to make an entry here and just put a stop under 988, the low of this pullback, and hope that that level holds. A patient bull is going to look for a bull break to take place. So we've got resistance at 1073. An aggressive bull can act on that. But either way, just at this point, this weekly consolidation, there's no red flags. But again, we know a break is coming here in the short term. CMPS is closer to support than MNMD. Look at MNMD. It's another cup and handle type of setup. And we had it back here. I made an entry back here. There was a little tiny one. Still in a runner position from that. But look at this. I guess we'll go 2-day chart. And we'll just stick with the daily. It's not a good cup and handle. I don't like using that phrase. It's the psychology of that pattern where you have a clear resistance rejection, double top, triple top, then a bull flag holding EMA 12, and then you look to break out. And look at that strong close today. So if we can break 501 and turn $5 into support, where's the next resistance level? The next two levels I'm looking at, 552 for a gap fill first, and then 632. Space opens up. There is a lack of resistance over $5. This reminds me of Coinbase, and crypto. 116, 114 double top. When you clear that, nothing nearby. We broke it. Over the next month, we went up 50% plus. We then back tested and held it perfectly into continuation. So this is a chart that is showing me what CMPS is trying to do with the back test and hold, and what MNMD is trying to do with the initial double top break. Good example for both examples. I might add to my position an average up. What I would like to see is an hourly bull flag. I don't want to just head right into a break of $5 because then you're a bit extended and you might not get followed through. Give me one more rejection, give me a bull flag on the hourly, and then break it. And I might buy a resistance break. And my style would be, maybe I buy 10,000 shares on a break of $5 and sell half at, 509. Sell half real quickly, so my break even is now down at 491, and stick a stop at 491. If we come back and revisit that level, I stop out, don't lose a thing. If we hold $5 and see continuation, a high volume breakout with some follow through, I benefit. I'm not sure if I'll do that. It depends on a lot of factors, but we'll see if that shapes up as even a possibility. But MNMD is knocking on the door of a lack of resistance. Let's go to the monthly, bigger picture. Monthly EMA 12, just like MSOS, it's been resistance for years. And we're trying to close over it for the first time this month. Last, we got ATAI. I like the tightening range here as well. Just viewing this, go to the 2-day if you want to condense it down. I'm viewing this as a high, low, lower high. So resistance, 193 and 197, two key levels. And support, 172 and 167, two key levels. Those are the most important levels for me. Two supports, two resistances. Which is going to break? And this just adds to, I know CMPS is tightening. I know ATAI is tightening. Volatility is coming. In an ideal world, XBI and IWM break bull, and XBI is on the verge of getting to the highest level. Weekly bull flag, hold that EMA 12, looking for continuation. If we get over 94.32, it's just 95. Well, there's still resistances here, but getting to a fresh high. You know, this sector does not trade tick for tick with the biotechs, but there's enough of a correlation where, you know, you want to see the biotech sector performing because it can only help. And you just compare, you know, CMPS. Is there a tick for tick correlation here? No, but I mean, they look pretty darn similar. We bottomed out end of October, bottomed out end of October, big move up, couple bull flags. So similar enough to just keep an eye on. All right, I'm done talking. Appreciate you watching. Likes and shares appreciated. Need a little bit of green next week to create some space above these recent lows if we're going to keep weekly consolidation healthy. Do good things, and we'll see you next time.